Welcome back. This is Corporate Trader. Well, let's get straight to the management of CreditAccess Grameen. The stock is surging after reporting a very, very good set of numbers in the first quarter. Net interest margins come in at the highest we've seen in 3 years, while asset quality as well has improved, aided by write-offs. To discuss more on this and their performance as well, we're joined by Mr. Udaya Kumar Hebbar, the MD and CEO of the company. Good morning, Mr. Hebbar, and congratulations on a very, very good set of numbers. Couple of questions first. Could you tell us whether the tenor of the book has reduced in the first quarter if I compare it with quarter 4? And also, do you want to up that AUM growth target that you had given us last time of around 25% because of such a solid start in quarter 1?
Yeah, there is no change of tenor in our book. It's as usual. We had about 29% 3-year tenor loans, which remains same as of Q1 also. And on the guidance, it's a sector, definitely it's a good quarter. We actually grown with the customer acquisitions, grown with the good disbursement compared to YOY. We have a very good numbers across. But we want to wait one more quarter to see and then review if there's a change in our guidance. But at this point of time, we are sticking to our guidance and we'll review after a quarter. We definitely observe a very good trend, and not only for the company, even for industry, we feel that this is going to be a good year.
Okay, all right. So you're sticking to 25% for now. Just one more question on your book. Geographically, you seem to be spreading out a little bit from your core home states. What's the plan going ahead?
It is a continuous process. We keep improving it. Actually, for last 1 year, our beyond core market, we increased almost 25% now. 24%. Customer level, it's about 33%. It's very, very good, actually. So I think, it's a continuous district-centric approach. We keep adding districts around our operations. Contiguous district approach helps us in building a strong book with quality, replicating our operation very well. We continue the same process. This will be, as usual, by next 3 to 4 years, the core market should come down below 65%.
Okay. Mr. Hebbar, good morning. I wanted your thoughts also on what's happening with asset quality. There is an improvement this time around, and your asset quality, your gross NPAs are under 1%. But because of the inflation situation, because of the floods, has there been any stress at all in the book? And if yes, what would the asset quality range look like by the end of the year?
No, actually, there is no any significant issue anywhere in the country, anywhere in our operations. Our asset quality improved further. And even now, with that below 1%, we have little legacy book of the acquisition, actually. If you take out, that's actually much less than 0.7% is our gross NPA. If you look at at a 90 days basis, it is just 70 bips, not even 89 bips. Because we consider NPA at 60 days basis. So I don't know whether you are aware about it, actually. No. So therefore, asset quality is quite good. What we guided is 1.6 to 1.8% is our credit cost, and we are definitely within that. Yeah. We'll be able to maintain within that.
Okay. Another, Mr. Hebbar, hi, good morning. Another data point which was being highlighted is that the share of unique customers for you has fallen from 43% to 34%. So the share of, customers with 2 or more other lenders has gone up quite substantially. How should one read this data point? Does it lead?
It is slightly changed because as we go to newer markets, we acquire customers. We may be a part of one customer, one lender already. So therefore, as you grow more and more beyond our core market, there's a higher chance of acquiring from other customers. Competition will play definitely. But the important point to see is within 12 months' time, if you see, almost 11% of customers actually slowly leaves all MFIs and becomes unique customer for ours. So that's actually, it will keep on, we keep on lending more to other customers. We keep on acquiring the customers from different geographies. So if you look at more than 3 lenders, I think it's hardly about 11% or so.
Just to, it doesn't in any way indicate to any potential future stress. High indebtedness and then...
Not really. What happened is the regulator removed that cap earlier. So earlier there was a cap. Now there is no cap. Now any lender can go and lend to the customer whom we already lent. Now, so I think that one change can increase the number of lenders. But in the meantime, regulator also put a cap of the FOIR, not more than 50% obligations to be maintained by every MFI. Therefore, this process, there is a good customer protection by every lenders. Therefore, if there's a more than 1.5 lakh unsecured loans, we don't lend to them. So automatically, we ensure that the asset quality is protected.
All right, Mr. Hebbar, the other bright spot of your numbers was the NIMs. Came in at around 13%, the highest in multiple years. So that's pretty good news. Now, I'm aware that, the rate that you are giving out loans has gone up a little bit, but your cost of funds as well has gone up. So taking both of that, on board, what could your NIMs look like from around this 13%? Should we see it tapering down a little bit? And for FY24, what should it look like?
So we guided 12 to 12.2%. Yeah, as I said, it's actually good improvement. And we expected some more cost to go up in this quarter, but fortunately we are able to control that. Therefore, NIM looks a little better. But as we use the capital, it will come down a bit. So because of the change in the overall capital adequacy. But still our guidance is about 12.2. We will review after a quarter. Maybe it may go up to 12.5 if everything goes well.
Okay. And, you spoke about how your overall growth, you'll stick to this 25% growth guidance. But I want to understand on the customer acquisition and loan growth, on an average, what are you looking at? I mean, what would the normalized, say, compounded growth be over the next 2 to 3 years? Will it be at 25% or would it be lower than that?
So actually, we guide about 20 to 25% in terms of portfolio growth, and as well as 15 to 18% customer growth. And actually, we guided almost, next 4 to 5 years, we should be able to reach a 50,000 crore portfolio book. So that is what we did guide in the last analyst meet on May 18th. We actually precipitated this, assuming that 4 to 5 years, we should be able to reach 50,000 crores for microfinance book.
So on the portfolio book, you're saying 50,000 crores over next 4 to 5 years. But any target that you have in FY24, it will be about 18% growth in your customer book. That's what you're saying?
15-16% customer growth and 24-25% portfolio growth. Have we already guided? So we will be able to achieve that.
All right. Mr. Hebbar, the last time you joined us, we had quizzed you about the promoter entity looking to bring down their stake. And you said that could be likely in the coming year. Our viewers as well as your shareholders remember that. And in the coming weeks, you went ahead, the promoter entity has diluted close to 5-6% odd. Are they done or will the promoter entity dilute further? Because I think the earlier guidance was around 10% odd is what you want to bring it down by.
Got it. So if you look at, it was one of the requirements what we have been requesting the promoter, if we can reduce a bit, which can help us to enhance the investor base and enhance the supporting shares, which largely we done, including the promoter stakes sold about 5.7% and about almost close to 2% based on the swap. With the last leg of the acquisition, I think overall almost 7% has been already diluted. Your floating shares almost 33%, which is quite good currently. I think, largely what we intended to do has been completed.
All right, Mr. Hebbar, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's CreditAccess Grameen. The stock is up almost about 4%. So they're talking about a good growth in excess of around 20 to 25% overall. And also a 16 to 18% growth in the customer book is what they're looking at for FY24. So that's CreditAccess Grameen. But let's do one thing. Let's get a handle on what's